Don't chill with Netflix. Can that be right? At least that's the message investors are saying after the market closed today, based on post-earnings report bids. Today is Wednesday, April 20th, and welcome back to Stock Market Fever. Today we look at Netflix to see where it's been, what it announced in its shocking first quarter report, and prospects moving forward. As Netflix managed a departure from Russia and an increasingly crowded North American market, the firm announced an unexpected drop in first quarter net subscribers. Following the release of the report, shares plummeted by more than 20% in after-hours bidding. After the close, Netflix reported that its quarterly earnings were $7.87 billion, which fell short of the $7.95 billion expected. And more worrisome was its unexpected loss of subscribers, down 200,000, whereas they were expected to increase their subscriber base by over 2.5 million. Netflix expects an astonishing 2 million drop in subscribers in the fiscal second quarter, although on average experts had been expecting a 2.4 million increase. Netflix attributed the loss of subscribers as being due to intense competition, and in a letter to shareholders Tuesday noted, "Our relatively high household penetration, when including the large number of households sharing accounts, combined with competition, is creating revenue growth headwinds." Netflix issued another price raise for North American subscribers earlier this year, which the company blamed for the quarter's loss of subscribers, but it stressed that the price hike's overall effect was substantially revenue positive. And Netflix was overall bullish on its ability to continue to grow, noting that while operating margins might be under a bit of pressure due to the strong dollar negatively impacting exchange rates and increased competition, quote, "We continue to grow in every country and region in which these new streaming alternatives have launched. This reinforces our view that the greatest opportunity in entertainment is the transition from linear to streaming, and that with under 10% of total TV screen time in the U.S., our biggest market, Netflix has tremendous room for growth if we can continue to improve our service." The market reaction to Netflix was savage as the bid on its shares plummeted to $258, down from its closing price of $348. Considering that Netflix opened the year at a giddy $609 and is now down to $259, and while its overall growth prospects seem intact, one might ask if the market has perhaps overreacted to Netflix's announcement. Is the stock now oversold? Might it bounce back? While Stock Market Fever offers no investment advice and always cautions investors to seek licensed professional consultation before investing, we believe a moderate bounce back is very possible, perhaps testing the $300 range in the coming weeks. But what do you think? Where do you think Netflix is heading? Please leave your thoughts and comments below, and be sure to subscribe now to Stock Market Fever for future news and stock market alerts.